What's your safe haven and why? Is it a person, a place, or perhaps an object? A safe haven is something that provides safety or a way to get away from things that one could find unsettling or potentially dangerous. This can take many different forms, but in trading, it typically takes on the form of an investment. Certain asset classes could give investors a sense of security. When the markets are volatile, as they are at present, investors look for investments that are predicted to retain or gain in value. These asset classes are known as safe haven assets. So how can you be sure that an asset will serve as a safe haven? Keep watching to find out. Here's a list of the characteristics that define a safe haven asset and where the rich invest their money. Number 1, liquidity. At any moment, the asset must be easily convertible to cash. You may avoid slippage by doing this, which will enable you to join and exit positions at your price. Slippage is the difference between a trade's anticipated price and the price at which it was actually executed. Number 2, correlation. The asset has no correlation or a negative correlation with conventional assets and the overall economy. To put it in another way, it might even increase in value during a market meltdown. Number 3, permanence. The asset's intrinsic value shouldn't diminish over time. Additionally, maintenance shouldn't be too expensive. It must perform a task that will sustain a prolonged demand for it. Always keep in mind that you're not purchasing a safe haven asset to profit handsomely from your investment. The goal is to invest in assets that will hold their value and lessen your exposure during severe, long market downturns. Number 4, supply and demand. Having a limited supply is necessary for a safe haven asset. For the price to remain stable, there must be a steady demand as well. When supply outweighs demand, an asset usually depreciates in value. Gold, which has a limited supply, is a great illustration of this, and its value increases anytime there is a rise in demand. Let's take a look at some of the most popular safe haven assets and some ways they can help you secure your money during unstable and uncertain times. Cash. Cash is regarded as the true safe haven during market downturns. You're fully aware of its value and what it can be used for. Its liquidity, which may be easily used to pay any immediate obligation, is one of its main advantages. But a cash investment has low to no returns, and its value steadily decreases when you account for inflation. Government bonds. Governments issue fixed-term debt securities known as government bonds to fund their expenditures and other liabilities. They're regarded as low risk due to government support and pay investors interest on a regular basis. Bonds from advanced economies are more sought after. Therefore, the most widely used and backed by the full trust and credit of the United States government are U.S. Treasury bills. Similar to cash, government bonds offer low yields, and some even negative. Gold. Gold has a long history of being viewed as a safe haven asset. Government central banks cannot control the supply of gold by printing more of it like they can with other currencies, and their decisions have no bearing on the price of gold. Since gold's value has remained steady over time, it is utilized as protection against unfavorable economic developments. Investors transfer their money to gold in the event of a long adverse economic crisis, which increases the price. Unlike many other precious metals, gold is highly liquid and may be easily converted to cash. The disadvantage with gold is that it will not produce any returns. In reality, there are storage expenses to consider. Defensive stocks. Shares in businesses that provide necessities like utilities, food and beverages, healthcare and consumer goods are considered defensive stocks. Because their products will continue to be in steady demand irrespective of the state of the economy, they are seen as safe haven assets. Also, defensive sector businesses typically perform better when the economy is weak because investors demand more of their shares. Currencies. In the past, investors have turned to the Japanese yen, the Swiss franc, and the US dollar as safe haven currencies. For example, when US stocks and government bonds are unstable, the Japanese yen frequently strengthens versus the dollar. As a result, it is regarded as a safe haven. The Japanese economy recovered from World War II rather fast, catching up to the rest of the world. The Bank of Japan, a highly regarded central bank, strove to make the yen a significant global currency. Because of its liquidity, the yen has continued to be appealing to investors throughout a financial crisis in spite of occasional government intervention. The enormous trade surplus Japan has compared to its debt is what gives the yen its status as a safe haven currency. This indicates that Japanese investors own significantly more foreign assets than foreign investors do Japanese assets. The Swiss franc. The Swiss franc has a history of strengthening whenever the world markets are unsteady. Because of Switzerland's renowned political neutrality, highly developed, secure financial system, and robust economy, the Swiss franc has earned a reputation as a safe haven currency. Additionally, the country's independence from EU assures that region is unaffected by unfavorable economic and political developments that disrupt the area. This makes it a well-known safe haven for capital during economic downturns. The US dollar. The fact that it's the most liquid currency on the forex market is one of its many vital safe haven qualities. The 1944 Bretton Woods Agreement, which established the US dollar as the world's main reserve currency, is credited with giving the US dollar its reputation. The US dollar was still viewed as a safe haven after the system was abolished, since it stood for the biggest economy in the world. Even the heightened volatility brought on by the heated political views of the current US president did not harm the reputation of the US dollar as analysts predicted. You must do everything in your power to prepare for your role as an investor. In the event that the market declines, safe haven assets help investors in lowering their risk of losses. Market turbulence is inevitable and a natural element of market cycles. You must figure out a strategy to keep your money secure. If you can determine the assets that are more likely to increase in value or hold their worth when others are declining, you can get ready for a market shift. However, there is no assurance that what provided a safe haven during a market downturn will continue to provide security for the next. Thus, before selecting a safe haven, investors must thoroughly consider their options. That concludes today's video, which we hope you enjoyed and learned something from. If you liked this video, don't forget to give it a thumbs up and subscribe to the Inlet Financial Coaching channel if you haven't already. Thanks for watching, and we'll see you in the next video.